Welcome to the Roy Morgan Weekly Update. There were two big news items in the last week leading into the Easter holidays. The first was the Reserve Bank's decision to pause their interest rate hikes after a record 10 consecutive increases. And the second was Opposition Leader Peter Dutton's announcement that the Liberal Party would formally advocate for a no vote at this year's referendum on the Voice. The political ramifications of the Liberal Party's decision to oppose the Voice could be significant when the referendum is held later in the year. But the latest Roy Morgan poll shows the Liberal Party is currently a long way behind the Albanese government. On a two-party preferred basis, the ALP increased its lead last week and is now on 56% compared to the Coalition on only 44% on a two-party preferred basis. Government confidence this week was virtually unchanged at 95.5, still just below the neutral level of 100, with more Australians saying the country's heading in the wrong direction, 43.5%, than the right direction, unchanged at 39%. On the economic front, the Reserve Bank's decision to pause their cycle of interest rate increases was welcomed by many, with the latest ANZ Roy Morgan Consumer Confidence Rating increasing by 1.1 points to 79.3. Consumer confidence is now up 2.8 points since bottoming in mid-March. A close look at the level of consumer confidence during last week shows a spike in consumer confidence on Wednesday, immediately after the Reserve Bank's decision. However, this increase moderated throughout the rest of the week as discussion turned to the future. And of course, the possibility remains that the Reserve Bank may again increase interest rates in the next few months. The next ABS quarterly CPI figures for the March quarter are due out in 2 weeks, just after Anzac Day, and they'll be key in assessing whether the Reserve Bank resumes raising interest rates next month or not. A look at consumer confidence by housing status shows where the biggest positive impact came. No surprises here, it was people paying off their home. Consumer confidence for this group rose 3.9 points to 74.4 last week, although this is still far lower than for other subgroups. Consumer confidence for renters is now at 80.6 and is at 83.1 for homeowners, still low, but above that crucial mark of 80. Consumer confidence overall has now been below 80 for 6 straight weeks since early March, the longest such streak since this became a weekly index in October 2008, nearly 15 years ago. In fact, the last time consumer confidence was stuck below 80 for this length of time was during the 1990-91 recession, when consumer confidence was interviewed monthly. Looking now at inflation expectations. Overall, inflation expectations were down 0.6% to 5.1% this week. So Australians expected inflation to average about 5.1% annually over the next 2 years. So this is the lowest since mid-February and below the average so far in 2023. The average was 5.4%. So it really looks like inflation expectations may have peaked. The sharp fall in inflation expectations is surely influenced by the Reserve Bank's decision to leave interest rates unchanged last week, which is a clear indication the Reserve Bank believe inflation pressures are easing in the economy. The biggest falls in inflation expectations were for homeowners. They were down 0.9 percentage points to 4.7%, and for those paying off their homes, down 0.8 percentage points to 4.8%, following the Reserve Bank's decision to pause on interest rate increases. Renters' inflation expectations were virtually unchanged at 5.8%. They're now far higher than any other housing status category. Turning now to Australia's businesses. Each month, Roy Morgan interviews around 1,500 businesses around Australia of different sizes and in different industries. The latest business confidence rating for March was at 93.6, down 2.2 points from February. This is the second consecutive monthly fall in the index and followed the Reserve Bank's record 10th straight interest rate increase in early March, but before the April increase rate pause. So there's a bit of a non-sync between business confidence and consumer confidence. Business confidence is only monthly. Business confidence then remains above the low of 90.2 reached in November 2022 and is significantly higher than the latest consumer confidence results. The Reserve Bank's decision to pause interest rate increases in April is also likely to have a positive impact on business confidence in future months. If we look at the confidence of businesses in different industries, it shows some of the key trends we've been seeing in recent months are continuing. Business confidence remains very high for accommodation and food services at 127.1, way above the 100 magical mark of equal positive and negative. Education and training businesses at 125.2. Both of these industries have benefited massively from the relaxation of COVID-19 restrictions on travel in the last 6 months. And a special Roy Morgan SMS poll conducted in conjunction with the Australian Retailers Association, the ARA, recently showed travel spending for the current Easter holidays was projected to rise significantly from a year ago to $9.1 billion this year. At the other end of the scale, business confidence remains low for electricity, gas and water at only 72, lower than any other industry. Other industries with low business confidence include the construction industry, with recent high-profile business bankruptcies highlighting the issues in this industry. The finance and insurance and property and business services industries, which both have low business confidence, well below 90. That's a wrap for this week. Subscribe to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thanks for listening today, and I look forward to bringing you the latest data on consumer confidence, inflation expectations and voting intentions at the same time next week. Take care. See you again next Tuesday.